Good morning, everybody. I'm glad you're able to join us today. Yesterday is kind of a mixed day. A reminder before we get started that if you like what we're doing here, please like our page on Facebook, Statler Financial Services, and share this video with your friends and family. Really would appreciate it. This market volatility, it's important to everybody to kind of get a handle on it. Hey, do want to remind you again today about our free report on retirement strategies. You know, retirement is a one and done deal, buddy. You don't get a second chance at retirement. So we want to get it right the first time. So we put together this free report on 5 retirement strategies you need to be aware of as you head into retirement. So, hey, to get it, just text retirement to 863-285-3815 here in Facebook. Just click the link right above this video. It'll take you right to the page. Hey, Dave will be with us here in just a moment.
105.7 Light FM. Police there. Morning, Dave is here. We're at 8:41. That's 19 before 9. Time checking in what's happening with your money. It's been a roller coaster and a half this week. Yesterday was almost looked like a normal day for a change, which is really kind of strange. And this morning, the inexplicable is happening, kind of, sort of. Anyway, let's go downtown to the offices of Statler Financial Services. Phillip Statler standing by, and you and I were kind of head scratching as to why everything is turning as green as it's turning this morning, Phillip.
Yeah, really, Dave. It's I don't see anything in the numbers give us any indication of it really bumping up any more than what it is. But it's getting a nice bounce, and you and I kidded before we went on the air. You know, we hope it's just not a dead cat bounce that's going to turn around and go the other way, and we won't know that, right, for a couple of days. But it would be nice to end up in the green today and end the week on a positive note.
Yeah, that would make it 2 green days in a row, which isn't half bad. Yesterday, if it was a normal week, yesterday would have been a normal day. Dow was up 99 points. NASDAQ was off by about 7, which is basically kissing your sister. And the Standard & Poor's was up by 7. It was just one of those semi-normal days on Wall Street. If it hadn't been following the 3 before it, we'd be yawning. For some reason or another, everything's taking off like a rocket this morning. And you and I were kind of surmising, hoping it wasn't a dead cat bounce, but somewhere down the line as we were falling, I think we hit a resistance point somewhere on the indexes, don't you?
Well, I think it is. I think there's some resistance there. And now I think about it, I did see some, a little headline. I didn't get a chance to really dig down. Is that, you know, the trade issues between us and China are going to affect China, again, much worse than us. And I heard a little blip somewhere, and I can't remember exactly where I heard it, but that China is really considering coming back to the table and really giving it a good try to see if we can't work something out. And so that could be part of it.
That's the point. It is something you and I have been saying for a while, and I've kind of felt like the voice in the wilderness listening to all of the pundits talking about how we're losing. It's stupid. We shouldn't be doing this. And bottom line is we can do a lot more damage to China than they can to us, and maybe, just maybe, that's it. The other thing that hit me is finally the bonds fell at least something resembling in line. I'm a rock-crushing 3 basis points more on the 10-year Treasury than the 2-year Treasury bills, which at the very least, it's not a negative yield curve between the two. And if the inversion's over, that's got to give traders at least a little bit of pause.
Well, it does. And, you know, the whole inversion deal, and I read another article just yesterday, you know, it's not a, hey, it inverted, that means this. It's got to stay in that inversion situation for a period of time to indicate that we are heading into that recessionary time.
Yeah, did you find anybody that had a theory as far as how long it needs to stay there? Because one day struck me as, you know, kind of a panic more than an actual rational reason.
It did. I've seen a couple things. I've seen the most recent article I read was a quarter. It needed to stay that way a quarter. I saw another one that said it needed to be that way for a month. Either way, that's a pretty long period of time that we need to see that inverted number there before it really gives us the indication of the recessionary period coming. Now, that doesn't mean it's not coming. I mean, you and I have been talking now for, it seems like a year and a half now, that things are slowing down, and we continue to see that happening every quarter.
Absolutely, and it's something nobody wants to think about it, but the fact of the matter is we are overdue for, at the very least, a substantial correction, and we are overdue for a recession of some sort, and we're always cheering for a soft landing recession when it actually happens. Day starts out with more indications that we're slowing down a little bit with housing starts, right?
Yeah, housing starts missed by a little bit, but it looks to me like housing permits are actually up a little bit. So, maybe it's, well, I don't know, a seasonal deal because we've been in summer. Buildings should be going crazy. And so I'm not sure what that disconnect is between those two. But one's a good indicator, one's not a good indicator. So I'm not sure which one you want to lean on.
I was going to say my best reaction to that is all of a sudden the mortgage prices start going down, get a little bit more people interested in buying and constructing new housing. That might explain the building permits, but at the very least, the market expected a crummy new home construction figure, and it was just a wee bit crummier than they expected. Fair statement?
Yeah, I think so. So they it's not as well as they had hoped, but still, we'll see what happens next time, and hopefully it continues to move in the right direction. But it may just be a timing thing too.
I got you. We're approaching the end of earnings season, but there's still a few companies that are reporting, and one of them is Big Green. How did John Deere do this last quarter?
So John Deere missed. Yeah, and they missed, I would say, by a pretty good margin. They're expected to come in at like $2.85 a share. They came in at $2.71 a share. So they missed their revenue, obviously, always missed forecast also. And the company said, it's this whole trade deal, right? Farmers are postponing purchasing these big pieces of equipment because there's this uncertainty in the export markets. And so they don't want to take on that big expense if this trade deal is going to continue to linger on and they can't sell their produce. So it's not hurting them too bad this morning. They're down about 0.5%.
That's at least within the range of reason. Yeah, the biggest challenge that Deere has, at the very least for their big farm implements, the guys that are selling corn are down to the point where the price they get at the elevator is down right near their input cost, and that's not exactly what you want, a break-even year when you're in any line of work. Yeah. Other indications you got?
So I've got Applied Materials. They're a semiconductor. They make some of those computer boards and that kind of stuff. They beat by 4 cents a share. Their revenue was above what the Wall Street had forecasted. However, they've come in and warned that recovery for them is not going to happen this year. It's probably going to be next year before they really get to where they need to be. And so they're trading down about 3% today.
I was going to say there had to be another shoe dropping if they beat the street, but they're still going down. It was guidance that did it.
Yeah, absolutely. Another one kind of the same area as that one's NVIDIA. They beat by 9 cents a share. Revenue was above forecast as well. They're getting some higher demand for their high-end chips, which is helping them greatly this morning. They're up 5.1%. And then my big loser for the day comes from the retail sector.
Oh, no.
Dillard's.
I was got to say that again. We're breaking up on the phone. Who was the big loser?
Dillard's.
Oh, no.
Yeah. Dillard's lost more than 70 cents more than what it was supposed to. Crazy. Same-store sales fell by 1%. They're trading down this morning over 13.5%.
Crud, another brick-and-mortar retailer with a bad report. That's not what we want to hear for a whole sector, is it?
No, it's really not. It's sad to see this really happening to that industry as a whole.
Absolutely, because that whole sector is just getting beat to crud this quarter.
It is. You know, we were talking about J.C. Penney's yesterday. Did you see today? They're going to start selling high-end used clothes in some of their retail outlets.
What?
They're teaming up with some company that specializes in high-end resale clothing, and they're going to start putting some of that in their stores and some of their stores and cycling it through every month.
Well, that story's going to be developing for the next couple of weeks. I didn't see that, and I'm kind of going, resetting the table. It was a mixed day on Wall Street, generally up yesterday, 45 minutes before we opened today, Phillip. How are we doing anyway with the futures?
Hey, it's looking really good this morning compared to what we've seen this week. The Dow's up 227 points, so we're getting close to 1%. The S&P 500 is up 0.9%, $25.65. The Nasdaq's doing well, up 1%, and we got gold and silver both retreating just a little bit, and crude oil is coming back up 0.7% to $54.84 a barrel.
Yeah, I'll take under 55 and be happy with that. Green ink for all intents and purposes all around the world. Asian rim up modestly this morning. Europe is up substantially 45 minutes about 45 minutes away from the time we start trading. Phillip, I need help stabilizing requirement even when things look good. Volatility happens. How do I get a hold of you for some solid advice to ensure a solid retirement?
Give us a call at 382-0037 to schedule your financial x-ray analysis of your current portfolio. Really dive in to see how much risk you have in your portfolio. See what happens if you had another 2008. How would your portfolio react? Call us for that free analysis. And then join us every weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturdays, 10 a.m. Sunday mornings on News Talk, 7:30 a.m.
And back every morning on Light FM, almost all the time anyway. Phillip, you have a great weekend. We'll catch you shortly, all right?
All right, buddy. Have a good one.
Be well. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Of all the questions you get asked every day, this is the one you shouldn't ignore.
All righty. So I should try on Monday, right?
Yeah. Hey, folks, I hope that you got a little something out of today's show. Just a heads up. I will be traveling the next few weeks. I've got a week in Chicago on business, and then Joyce and I are taking 2 weeks of vacation, and so we'll be out of pocket for a couple weeks. I hope to be on and off next week a little bit, and we'll bring you tidbits every now and then as things break in the market as a whole. Again, I want to remind you about our free report. Whether I'm here or gone, it's available. All you have to do is text retirement to 863-285-3815. Have a great weekend, and I'm hoping I will get to talk to you on Monday.